One of the most disruptive forces in wealth management right now isn't a new product, it's Gen Z. They don't want the traditional playbook. They want control, transparency, tech that works, and guidance that meets them where they are.
I think that the clear trend is that people want to make those decisions on behalf of their own wealth as opposed to somebody making it for them. And I think that that has largely, driven Robinhood, as well as other folks like Webull and things like Coinbase or Kraken, as well as other decentralized alternatives and their businesses forward.
And with a massive wealth transfer headed their way, they're about to force the biggest shift in wealth management in decades. So what exactly does Gen Z want, and how is Wall Street scrambling to keep up? Gen Z is on track to become the most financially powerful young generation in history, and one of the world's leading tax advisory organizations, KPMG, estimates that up to $105 trillion could pivot to younger generations by 2048.
It was during kind of the GameStop phase, and many people were, doing things like buying GameStop or reading Wall Street Bets. But yes, that was really the big phenomenon that onboarded many people.
This is not just a torch pass, it's a reset of what financial advice looks like. KPMG's report says Gen Z is the only generation more satisfied with self-directed investing than with advisors. They prioritize digital tools 7 times more than boomers, and they value transparency 4.5 times more. The KPMG team behind this report says Gen Z's expectations are redefining what trust looks like.
They demand transparency about having direct visibility and control over their investments. I think it's just an opportunity for advisors and firms to ensure that they're catering for those differences and building models that are hybrid in nature that cater to both advised models and self-directed in an integrated fashion.
Gen Z investor Cooper Emmons says his generation is angling for the next big winners in the market.
I think that you're seeing a lot of Gen Z invest into things like NVIDIA and Palantir, as opposed to investing into what traditionally was Coca-Cola or things similar to Coca-Cola, or let's say Home Depot, Walmart, etc. And there's a far different concept there. And effectively, I think it all stems in the volatility and the future growth.
And for many young investors, the launchpad wasn't a mutual fund or a 401k, it was crypto.
I think crypto has proven to be an asset that has been trusted by the Gen Z community and has been an entry point to investing for them. It is a new asset class that has now largely been driven off of speculative capital, but also has an underpinning of real technology and technology that can evolve the world. If you go to, a much more traditional investor who's from a much older age bracket, they will say that crypto is largely casino gambling, and traditional equities are where wealth is created. And I think if you go into the new era or new, generation of folks such as myself, they see those things as very similar. Maybe crypto is much higher on the risk curve. However, it is still an asset that has a tangible value, and you can put dollars into those things that will grow year over year. And I'm a believer in that as well. So I think that you have to cut out the noise from a lot of these different things. And similar to any bubble, there are going to be a lot of things that are overinflated and go to zero over the long term. But there are a few great assets in the broader world of crypto that should be compared to things that exist in traditional equities.
Jamie Leverton, CEO of digital asset platform Reserve One, says crypto fits naturally into how this generation thinks.
They're digitally native anyway, and digital assets are just kind of part of what they know. Crypto really just becomes an extension of that.
At Robinhood, Gen Z's footprint is massive. Half of their customers are first-time investors. And Chief Brokerage Officer Steve Quirk sees Gen Z coming into the market faster and earlier than any group before them.
Of the 26 million people at Robinhood, half of them are brand new to the market. And so we have a really good track record of removing the friction and opening the door to the greatest wealth creation vehicle on the planet, which is the U.S. market.
And how they invest is different too. They want access anytime and anywhere. Social media shapes their strategy, and they learn in real time. often from people they've never met.
Here are some financial lessons and tips.
This is how I'd invest my first $1,000 in 20.
It's never too early.
I would say that the majority of investors in my age range are, driven by more of the concept of copy trading. And what I mean by that is a large influencer comes out and says, hey, I just bought this asset, you should too. They've put in a lot of faith or think very highly of some influencer on the internet. And because they have bought that thing, they have then followed them and said, hey, this is probably a good idea for me to buy too. I think that there's a lot of danger in that, and the consumer protections around that. I trust the regulators will put things in place to get that right. But also, I think that it's kind of the new era of investing.
They have access to their investments 24/7. And they have access to news 24/7. And we're providing them the ability to make investments or changes to their portfolio around the clock. A lot of the news that happens in the world that's going to drive the U.S. markets and the equities that people hold isn't happening during the hours of 9 to 3. Having the ability to be able to interact when that happens or when you want to take advantage of that is going to be different.
But Cooper says he does his own research for his investments, and he's made well into 6 figures from investing.
I think largely it's been chasing narratives. I think over the past year, data centers and AI have been the big narrative. So looking into things like Bitcoin miners, looking into things like chip makers or energy companies, which have all done very well in this recent bull market. I think it's seeing where the puck is going from a more macro perspective, understanding the narrative and that being kicked off from things like TikTok or Instagram or the broader social media outlets is where I'm kind of forming those broader narratives. But then when determining what actual equity to choose or what actual investment to make, that's more driven through actual quantitative analysis, through things like quarterly reports or recent filings, et cetera.
According to a report by JP Morgan, 1 in 3 25-year-olds now has an investment account, a 6-fold jump from a decade ago. And Charles Schwab data says the average Gen Z investor starts trading at 19 years old compared to 35 for baby boomers. On an earnings call in October, the company's CEO, Rick Wurster, said roughly a third of its new clients this year are Gen Z, and when we talked to him back in August, he told us this generation is quickly becoming an important client base.
At Schwab, working with Gen Zers is of critical importance, and a couple things I'd share that Gen Z investors are actually 45% more likely than millennials to have started investing by the age of 21. That's a great thing for their long-term financial success. And we're seeing that at Schwab too. In fact, 1 in 6 of our new-to-firm households are under the age of 24, and 30% are under the age of 30. So we are winning with the young investors.
Young people entered the market largely during a bull run, so risk never looked that scary, and that shaped everything.
Gen Z, which has been largely driven by technology, and largely driven by TikTok, Instagram, all these different forms of social media, has been shown the want or the craving to generate a ton of money, and folks that have gone 0 to 100 in their money. And they've also been given a ton of tools, such as things like Robinhood, crypto, investing in meme coins, investing in penny stocks, etc., to effectively go and get from 0 to 100. All of these tools and this era of social media have brought in the Gen Z investor significantly further in the risk curve.
But that risk curve comes with a catch. Most young investors have never lived through a real recession. The last brutal downturn was in 2008, and Gen Z was in elementary school. Now they're building their portfolios without ever having experienced long-term market pain.
One caution I would say is, the satisfaction with these capabilities has been untested by major downturns.
We haven't experienced a downturn, so everybody looks like a winner right now. Really, since 2008, the market has done nothing but go up. So it feels right now like I can go and buy these tech stocks or any types of stocks, and I will just do just fine. But I think that that's not forever.
The preference is formed during largely a positive market trend that we've seen over many years. And so a significant disruption could change their perspective on needing more human advice.
Another pressure point, Gen Z is a flight risk. If a platform has better tools or a cleaner experience, they're gone.
They have to want to stay with you. Their identity needs to in some way be connected to your identity as a brand. It's essentially frictionless from a switching cost perspective. So I think that engagement with customers is going to be critical.
As the study found, transparency is a non-negotiable for trust. Gen Z places 4 times greater emphasis on transparency than the boomers, and it's become a baseline expectation.
And for Gen Z, education is a trust builder. Firms that gamify learning, offer hybrid models, and deliver advice on mobile are the ones that will win. There's also real advantage for Gen Z. They're investing in an era of zero commissions, ultra-low ETF fees, and fractional shares that let them start with $1. And with dozens of apps offering 24/7 access, they have more choices and more control than any generation that came before.
I think this generation has an advantage because they're going to come in at a much lower cost basis. They're going to come in to a system that they can navigate and control more of their own wealth because they're not going to have the same fee structure.
Gen Z is not waiting for the industry to change. They're changing it themselves. They want digital-first platforms, real transparency, lower fees, and advice that fits their lives, not their parents'. And with trillions of dollars about to shift into their accounts, they're about to become the most important client base in America. For Investors Business Daily, I'm Clara O'Connor.